If you own a condo in the Myrtle Beach area or you're looking to buy a condo in the Myrtle Beach area, then you need to pay close attention to what I'm about to tell you. So there's starting to be a movement right now in the condo market here where every time a condo building, whether it's a resort, whether it's a subdivision, a community, whatever it is, having to do with condos, whenever their insurance policy is coming up for renewal, okay, we're starting to see their insurance premiums go through the roof. As a matter of fact, I just got off the phone with a client who's got a condo in Myrtle Beach. He's got a 3-bedroom unit. He just got a letter from his HOA that he has to pay a $3,800 assessment to cover the shortage in insurance. $3,800. That's more than $300 a month, right? That was for a 3-bedroom. I think a 2-bedroom was $2,800. So I'm hearing more and more of these stories across the board. It's not specific just to your building or your community or subdivision. Insurance here on the coastal areas is getting tougher and tougher to get. A lot of companies do not want to insure these coastal properties. So what's happening, the ones that are left are charging more and more money. And again, every time I see a renewals coming up, I don't know when your renewals coming up, the premiums are going up. And of course, when it comes to HOAs, they typically don't have a lot of reserves in the bank to be able to cover something like that. So what's happening is owners are getting hit with either an assessment or what they're seeing is HOA dues go up. I got another client whose HOA dues just went up $150. That gets them close to $500 a month for HOA dues. So the reason I'm telling you all of this is you need to do a couple things right now. Well, I mean, first of all, if you live there and you don't care about moving, never going to move, then it really doesn't matter. You just know that your costs are most likely going to be going up. If you have an investment, if one of these condos is an investment for you, whether it's a long-term rental, whether it's short-term rentals, whatever you do with it, okay, and your numbers are pretty tight already as far as your cash flow, then you got to pay really close attention to this because you need to factor in what happens if your HOA dues go up $100, $150. What happens if there's another $200 or $300 a month in insurance costs to you? Is that going to change your model for that investment? Is that going to make you want to sell and get out of that and maybe go into something else? These are the things that you need to be thinking about and looking at. So what I suggest is a couple of things. Reach out to your HOA. Find out if they've gotten the most recent, if they quoted the most recent premium for your insurance. And if they have, what are they looking at? What are they seeing? Do they anticipate it going up? So kind of meet this before it comes to you. Find out what's going on so you can be one of the first ones to know. Second thing is, once you do that, look, find out if there's a special assessment coming up. A lot of these condo buildings here in town are getting older and older, and what we're seeing is a lot of these resorts or HOAs are having to put some money back into the building, or even a property management on site. There's a whole nother conversation that I'll have with you on another video where we're seeing a trend right now where on-site property management companies are having to shell out some major upgrade packages to be able to get the units in the building to what's a respectable level nowadays. But that's going to be a whole nother conversation on a different video. Right now, back to the insurance. So number one, reach out to your HOA and find out if they've quoted the insurance yet. Find out what it's going to mean to you. How much is your HOA going to go up, or how much of an assessment are you going to get hit with? Second thing is there anything else outside of insurance that they're looking to do that's going to cause an assessment for you? That's the second thing. Third thing is get a hold of the financials. Reach out to the HOA, get all their financials, find out how safe and how well funded your HOA is. Is there a lot of money in reserves, or they're barely getting along? Okay, if they're barely making it, then that should tell you as soon as something comes up that needs to be done, it's going to mean that you're going to get hit with a special assessment. Okay, now you can either reserve the money for that and be prepared, or you can make a determination that, hey, I don't want anything to do with that. I need to be doing something else with my money. So if you own a condo here in town, please look at that and prepare yourself for what's going on and what's coming. If you're looking to buy, then make sure you're aligned with the right agent to actually look at these documents and look at what you're getting into as far as the HOA and their reserves and things like that. Of course, I'm here to help you any way I can. If you have any questions, you want to run the numbers by me, I'm here, and I deal with a lot of condo owners here in town and a lot of condo buyers. So I try to stay as much in the loop as possible and know what's going on and which buildings are doing what. So if you ever have any questions or want to talk to me, please reach out.